So the Q1 FY27 earnings have come out from almost all of the auto OEMs, and let's have a look at them. So the quarter has been good and strong for almost all major OEMs, with demand being strong, but the only concern being the margins. We can see that in the case of Maruti Suzuki as well, while demand was very healthy on ground with bookings across urban and rural areas, and they've been undertaking some serious capacity ramp up to support this enhanced demand. When we talk about M&M, they're seeing some very strong traction across both the rural and urban markets, and that is helping the stock inch upwards as well. Talking about Tata Motors has been a very fascinating case where their YOY numbers for auto sales for every month have been very strong, and that is what is supporting the volume growth for Tata Motors. In case of Hyundai, we saw that this registered a 8 to 10% of volume growth, but was hit by a supply constraint because of a fire incident at one of the suppliers' place. We can see that the pricing action has been in fast focus for OEMs, and they've taken some price hikes to offset the commodity inflation that they are witnessing, an unprecedented commodity inflation. In the case of Maruti, they've taken a 50 bips June price hike in June, and they will start taking another round of 30,000 up to 30,000 price hike starting August. For M&M, they've taken some serious price hikes, cumulative of around 4.5%, of which 1.5% was taken in Q1 and 2.7% was taken in the month of July gone by. For Tata Motors, they've taken around 1% cumulative price hike, and for Hyundai, they've announced that they'll be taking calibrated price hikes considering the commodity cost inflation as it goes moving into the Q2, and the discounts now stands at around 2.8% of the average selling price. So discounts have been in focus for Hyundai as well. They've also ramping up their launches. We can see the OEMs are coming out with a lot of launches, with Maruti Suzuki being having launched their latest Brezza, and it is receiving a phenomenal response across tier 2, tier 3 and tier 1 cities with around 2,000 bookings a day, and that is working well in favor for the company. For M&M, they are taking their total capacity to around 14,000 units earmarked for FY26, and their new platform, which is the new IQ at Chakan, will be effect from FY28. Talking about Tata Motors, they will be coming out with one more EV and two big refreshes in FY27, with 4 new BEV launches planned for the JLR segment, which is what is exciting the customers coming forward. For Hyundai, they've launched 2 launches in the second half of FY27, with one mid-size ICE engine and one dedicated EV. Hyundai has come on board to accept the fact that there's difficulty in launches has been the key to losing their market share. And our last segment would be the capacity expansion that these OEMs are undertaking, and everyone is stating that their supply constraint is in place and they are unable to meet the demand, and that is why Maruti Suzuki will have around 2.9 million units per year when combined with the Kharkhoda and Hansalpur EV plant. For M&M, it will be 92,000 per month SUV capacity by FY28. For Tata Motors, they are targeting at 70,000 units per month production. For Hyundai, it comes at around 170,000 units per year, including the Pune plant. So all in all, a very strong quarter gone by for the auto industry. We've seen some strong demand across markets, but margin seems to be the key pressure.